Good morning, fellows. We are here to introducing about anatomy of the credit score, and we are discussing about anatomy of a credit score. What is credit score? And we are talking about here what is a credit score. Abstract. The paper addresses the question of what determined a poor credit score. We compared estimated credit score with measure of impulsivity, time preference, risk attitude, trustworthiness in an effort to determine the preferences that underlie credit behavior. Data is collected using insensitivities, decision making, lab experiment together with financial and psychological surveys. Credit score are estimated using an online FICO credit score estimator based on survey data supplied by the participant. Preference are assessed using a survey measure of impulsive with experimental measure of time and risk preferences, as well as trustworthiness controlling for income differences. We find that the credit score is correlated with measures of impulsivity, time preference, and trustworthiness. We are taking about its highlights. Highlights are here. We ask what are determined poor credit score. Credit score are estimated using an online FICO credit score estimator. Trustworthiness, risk tolerance, and patience are measured in experimental games. Credit score are correlated with impulsivity, patience, and trustworthiness. Credit score has become an increasingly popular topic in the recent year in the media, in the business, at the dinner table. In these days of easy access to information, a negative credit events such as a mortgage defaulter or bankruptcies and haunt a consumer for a considerable period of time. A credit score is a number that represents an assessment of the credit worthlines of a person or the likelihood that a person will repay his or her debts. Credit score are generated based on the statistical analysis of person credit report. Credit bureaus such as Experian, Equifax, TransUnion maintain a record of person borrowing and repaying activity. The Fair Isaac Corporation's FICO developed the formula used by three major credit reporting agencies in the United States. The algorithm is kept secret, but most believe that is based upon the ratio of a debt available credit. This denominator in most cases is a direct function of income. The score is then adjusted for payment history, number of credit applications, negative events such as bankruptcy, foreclosure, as changes in the income caused by change in employment or family status. In addition to its original purpose, credit score are also used to determine insurance rate and for pre-employment screening. Employment as well lender use credit reports and scores to gain insight into the records and tendencies of prospective employees, making an assumption that credit score correlate with general trustworthiness. There is even dating website creditscoredating.com that's purports to match subscribers with high score partners. With reports and scores available to the public for little or no cost, the FICO score has become a part of the dating and meeting process. Along with a criminal background check, a credit report reveals much as about person personality and behavioral tendencies, or does it? The repayment of debt is contingent upon two factors: the ability to pay the debt and borrowers And while the second is a more psychological in nature, debater may choose to their pay balance, reduce funds available to spend on the item, or default on their loans and keep their current level of liquidity, accruing penalties and credit business purpose. Our study seek to find which is understanding personality factor contributed, its factor impedance, impulsive risk tolerance, and worth lines. It's maybe seem unreasonable to expect. Now my topic is about to end.